What's going on, guys? It's Expo Jesse. Today on Teaching Tuesdays, we're going to be going over market structure and how to follow it. And then if you've seen my alerts, you know I type acronyms like BOS and CHOCH, and we'll go over that and what they mean. And hopefully after this lesson, it's going to be a real simple one, but a foundational one for sure. So when we're looking at market structure, we got to look at a chart. And, you know, a candlestick chart is going to have a lot more noise than just a straight line up and a straight line down, right? So we have to just kind of ignore the noise and look at the trend. So here is a downtrend where the market's just going down, but it doesn't just do this, right? It doesn't just go boom. No, it goes lower, low, lower, high, lower, low, lower, high. And what that means is once we break structure, it's a lower low. And then anywhere between the previous lower low, or sorry, the previous lower high, once it starts curling up and then starts curling back down, this is a lower high, right? So we made our lower low because somewhere back here was a low, right? If we did like this, once we broke this, then it's a lower low. No matter where it ends up, once we start curling, then we know where the lower low was. And then we can mark it if we want to. And then it starts curling up. It doesn't break the previous high, so it's a lower high. Then starts curling down. It does break the lower low, and so now it is a lower low. Doesn't break the previous high, so it's a lower high because this is the lower high. So if I drew a line here, we don't have any high under this high is a lower high. And then after this one was created, any high over this high is a lower high, so on and so forth. So that's a downtrend. Here's an uptrend. Right, let me get rid of this just to make it a little easier to follow. So here's an uptrend. We broke the previous high, higher high. We did not break the previous low, so it's a higher low. We broke the previous high, higher high. Did not break the previous low because it's right here. So it is a higher low because it's above. So higher high, higher low, higher high, higher low, higher high. As soon as we broke this high, it is a higher high. Okay, so very simple. But now we'll get into breakage structure. So like I said, if you've seen my alerts, you know what a breakage structure is, or you've at least seen me use a BOS FVG. So FVG is a fair value gap. BOS is a breakage structure fair value gap. So it's a fair value gap that is left behind after we have enough momentum to break structure. So a breakage structure happens inside of the structure. So here is bearish structure because we have a lower low, lower high, lower low, lower high, lower low. So every time that lower low is broken, it is a breakage structure. This could go on for forever. If I went, just went like this, just kept going. Every time it breaks this lower low, it is going to be a breakage structure. Okay, very simple. A breakage structure happens inside of the current market structure. Doesn't matter if it's bullish or bearish. This could be, if I draw a chart, a bullish market structure. Here's going to be a breakage structure. And here's going to be a breakage structure. This could go on forever and ever and ever and ever. And it would always be a breakage structure because it is inside of the current market structure. It's very important to know that. Now, when we go through this chart, this is where you see a lot of different acronyms and such, but it's very, very simple. Okay, so we have a higher high, higher low. When we break that higher high, it's a break of structure because we are in bullish market structure. Then we have a higher high. We come down, we swing down, have a higher low, but we do not break this high here. We cannot break this high. And so what happens is we have a lower high. As soon as this starts curling down and breaks this low, then I know this is a lower high. And this is a change of character because we changed from bullish market structure and we switched to bearish market structure. Okay, so let's go back from the start. Higher high, higher low, higher high. We have a break of structure. Higher high, higher low. We did not make a higher high, so really we don't know what this is yet. But as soon as we broke through this higher low, then wherever we end up is a lower low. And because of that, we switched from the H's being the first letter because we're in a bullish market structure. H's meaning higher high, higher low, higher high. So we're continuing to go up and down, up, down, up, down, but we're continuing to, the total direction is higher. But now we switched because now the L is the first letter, meaning lower. And so now we're switching to bearish market structure. So this is where the change of character happens. Okay. So then we go higher low, lower high because we didn't make a higher high. Broke that, lower low, lower high, break of structure because we made a new lower low. And then you could see a change of character like this, where we go from a lower low to directly to a higher high. Okay, so if this happens, this is a little bit more impactful than this change of character because we had so much momentum shooting us up that we didn't even need any retracement to get more friends to go higher. We just shot straight through previous resistance and ended up shooting just straight through. If we have a retracement, that's fine. This is still a change of character, but in this case, on the right side where we just go straight from lower low to higher high, that's going to tell me that the market is probably looking to totally reverse. This can happen very quickly, especially if it's a liquidity grab. And we'll look at today's market on the 5-minute chart and kind of plot through all these higher high, higher lows, and this should make more sense. So I have an indicator here, which is BOS/Chach, which is from Nephew Sam, or change of character. This will plot out algorithmically every break of structure and change of character. For now, I'm going to hide it. I'm also going to hide the colors from the strat, and we're just going to look at price action. I'll also hide this. So if you don't have any indicators, this is what you're looking at, right? So let's draw an arrow. Remember, there's a ton of noise in here, but I can just draw an arrow and say, okay, here, there, there. Okay, so what's the market structure here? This, if I look left, this is technically a lower low. So then I need to plot the previous lower high to see when the change of character is going to happen. And that's right here. And then we do break that at this level. So this is going to be the change of character, which makes this the higher high, makes this little retracement the higher low. And then as soon as we break this previous high, which is somewhere around here, then wherever we end up going is a higher high, wherever we start curling up. So if I start clicking through, and it's always a good idea at these higher lows or lower highs to draw a line, because that's where your change of character is going to be. And here we have a change of character at 10:15. So market opens at 9:30. We're in bullish market structure, and it's important to know what this market structure looks like, because if you're on this trend, if you're following the trend, your trades are much more likely to much more probable to be successful and win. It's no secret that retail doesn't run the market. The market is institutionally ran. My $1,000 doesn't touch the order size that an institution can touch. And so yes, retail does have some influence, which is part of smart money concepts, or ICT, where we can look at where most of retail is getting trapped. But if we are following what the big money wants to do, the trades are much more probable to be successful. So if I'm following the trend and going higher highs and higher lows, anytime that I'm in bear or bullish market structure, I should probably only be looking to be in a long. I shouldn't be looking to short because it's counter trend, and especially, counting off of the strat that we've taught the last 2 weeks or gone over the last 2 weeks. Full time frame continuity is the same kind of thing as market structure, in the sense that I want to be on the same side that the big boys are on, and I want to be trading with them and with their bias, because they're ultimately going to move the market wherever they want to. So following that, higher high, higher low, higher high, anytime above this higher low, I should be looking for, on this 15-minute chart, I should be looking for longs. As soon as we break this change of character, wherever we end up, remember from what I said earlier, wherever we end up is going to be a lower low. So under this, as soon as we change character, I'm looking for shorts. Doesn't matter if it's on the 5 minute or the 1 minute or the 15 or the day. If market structure has changed its bias on that time frame, I'm looking to change my bias as well on that time frame. And so sometimes you'll see where, if I zoom out here, ES probably isn't the best example. Let's look at NQ today. Cancel that. So here on NQ, here's a 1 minute change of character. And if I look over here on the 5 minute chart, 5 minute change of character isn't for another, 20 points. But off of the 1 minute chart, change of character was 40 points ago. And that's where I would be looking to get out of my shorts if I'm in a short, because the 1 minute chart has changed character and is now bullish. Even though on the 15 it's still very bearish, there's still a reason to be short. But for me, if I can take off my shorts here, I'm off 40 points from where we're at right now. I captured 40 points extra. And then I'm looking based on my trade system. I know that here's a 15-minute fair value gap. Here's a probable point where the market is likely to reverse. And so I can just re-enter up there. Here's a 5-minute fair value gap layered on top of a 15. This is probably where I would be looking to get back in short. So I captured an extra 40 points by getting out here early, and then I can re-enter. And then ideally, the market's going to do something like this. Whoops, not text. The market's going to go up, come back down a little bit, up there, and I'm running out of space, but it's going to change character up here. And then I'm going to get a nice entry right here. Stop loss would be above the next change of character. And then my risk to reward is heavy, right? Because now I'm able to get in at a very, very steep discount and get the same kind of target that I'd be looking for based on the 15-minute chart would be over here. So that's why following market structure is very, very, very important. Okay, but let's go back to ES, and I probably lost my spot, but okay, so I only trade from 9:30 to 11. That's my most profitable trade window. But if you traded all day, let's go through and we'll just mark out the chart. Okay, so a lot of chop here. Here's change of character. Technically, as soon as we break through here, it's not a change of character unless it closes under or above the previous resistance. So here's a higher low. We closed under that higher low, so that's the change of character. If it wicks, those are liquidity grabs. So here's a higher high. Technically, this is a change of character right here, but I'd probably not be looking in to get long until we can have some sort of confluence that we're holding over. And really what probably happened here is we closed green on a 15-minute candle, and then the next candle we just shot back down. Right, so here's lower low. So then I'm looking here as a change of character, because right now we're kind of making a higher high, and then this is going to be a lower low. So we changed that first letter from an H to an L, so that's a change of character. And then now I'm looking to go short for the rest of the day, or at least as long as we're under that change of character. And so that can kind of keep you out of chop, especially if we're just chopping sideways and we're not making new changes of character, or if there's no market structure at all. I don't know if I'm going to get 5-minute data here. Oh, I did. Nice. So here on the 5-minute, it's a little easier to find market structure on lower time frames. I know I won't get the 1 minute, so I won't even try, just because it's so far in the past. But the 5-minute's a little easier to see because you get more candles to kind of decide market structure, right? So here is kind of what I'm seeing as market structure. And we don't really make a retracement, but that's kind of the market structure. So I'll make that huge and make it white. And you can kind of see it layered over. So we have a higher high, higher low, higher high, change of character here. Technically here. A lower low, equal high, because we didn't have a higher high or a higher low. Or sorry, we didn't have a higher high or a lower high. So I would say this is an equal high, lower high, or sorry, this is a lower low. Well, actually, this is probably pretty equal. Not really much move in there. So I probably wouldn't call any retracement here. Ideally, I'd like to see the market go like this, right? So equal high, higher low because we're above this low, lower high, breaking, lower low, change of character. So it can be very, very, very simple to follow. Just kind of do what I did here, right? You just look, we'll do a whole new example here. Draw an arrow, get rid of the noise, go high, low, high, low, high, low. And then you can kind of follow market structure this way. Obviously, this is after hours, so not the best example, but you get the gist. And like I said, the whole point of following market structure is so that you can be on the same team that the big boys are on, the guys who are actually moving the markets, and you can be trading with them and on their side, and that's when I find that most of my trades are most probable to win. So that wraps it up, and we'll see you next week for Teacher Tuesdays.